Hey everybody, this is Rich Hanlin with Mortgage Ballers. Welcome to 2025. Today we are going to talk about the hot topic of the day of the year, and I think this is going to be the big name for the year, and we're going to talk about homeowner insurance premiums. If ever you wanted to know what's going to inundate the real estate market, well, guess what the crisis is? It ain't the interest rates. It's not the values of the homes. It's the availability of homeowners insurance. We are seeing absolute madness as far as homeowners insurance. The cost of homeowners insurance has gone up astronomically. And people say, wait, what are you talking about, Rich? It's the rates. We don't care about insurance. It's the rates, man. If those rates would just go down, really. When you are maxing out on a home payment, which includes your principal and interest, which is based on your interest rate and loan amount, your property taxes, and your homeowner's insurance, it makes up the total cost of what you got to pay in order to have home ownership. You know, this starts to fall in the line that people say, you know what? The only way I can save money is if I can refinance my house because that's my biggest payment. But yet they have $800 car payments and they've got another $1,000 a month going out in credit card bills. But the only way to save money is if they can get lower interest rates on their house payment. They tend to separate these into their own buckets when the truth is, how much total outgo you have per month is your outgo. And the question is, what makes up that total outgo? And is there any place in that total outgo that you can change and or manipulate to save money per month? You cannot just say it can only be if I can get a lower interest rate on my house. Because what if that doesn't happen? What if the rates don't go down for the next 4 or 5 years because inflation was not going away and it's sticky? We got a new administration coming in. Do you think he's going to turn the Titanic in 2 days and you're going to be at 2% rates? We're never going to see 2% rates again. That is part of the problem that we're in. We never should have done that. We've now done it twice. We did it in 2008 with that real estate crash. We couldn't give real estate away. Values were going down so fast, people were running from it. Do you remember it? The leveraged foreclosures where people said, you know what? My house was worth $600,000, but I can buy the same house for $400,000. I'm going to buy the new house and I'm going to let the other one go into foreclosure because I end up with the same house. Buyout, leveraged foreclosure. Good word. Some people forget that. What was the second time? Well, we had this thing happen in 20 and 21, a little pandemic that caused some major hiccups. And guess what? They took the rates right back down and people bought a ton of real estate. And guess what? Nobody wants to let those rates go, but they have sure ran up their personal debt. Personal debt's at an all-time high. Car payments are at an all-time high. Car payment defaults are at an all-time high. Credit card payments are at an all-time default high. We're at the highest debt load that America has ever seen, and we're acting like it's just another day in the world. Yeah, so let's get real for a minute and talk about the item that I think for 2025 that's going to make or break the housing market: insurance. I don't care what 1% in interest is going to do for you. It doesn't save enough. Something will have to give if people cannot get insured. It doesn't matter what the rates are. Here's a question for you. Rates go to 2% and you're like, yes, I can get that house now for $1,000 less per month. That's good. But your insurance is now $2,000 per month. Well, wait a minute. I can't build equity in insurance. Insurance is something I pay in case something happens because I can't pay cash for something. Therefore, if I don't have insurance or proper coverage of insurance, I'll get forced placed insurance. And when they do forced place, the lender does it at a premium because they had to do it for you and find it for you. So guess what? They're going to make a profit. That insurance is even worse. for those policies. You have to have insurance on your home if you carry a mortgage and or financing. I don't care if you have $1 left on your mortgage before it's paid off. As long as you have debt against your house that is secured by your house, you must have homeowners insurance. If you're in a flood zone, you have to have flood insurance. If you're in an area that has high winds, you're going to have wind insurance, or also tornado coverage, hurricane coverage. I mean, come on, we can go down the list depending on where you live. When you stack all those insurances together, and the premiums have gone up, in many cases doubled and tripled over the last 5 years, the biggest threat to home ownership isn't interest rates, it's insurance. I think in 2025, we're going to see possible some state insured or backed programs by the individual states. Some states have higher threats than others. So you'll start to see the real cost of, like, let's say living in California versus living in Nevada, or something like that, right? Colorado versus Wyoming, Florida versus Colorado. You know, where are these threats? A nationwide insurance company leverages the insurance across all policyholders, not just in your state, but across the board, right? Because they have to pay out and they have to stay in business. It's a business. Well, this is going to be the year when we start to see how these businesses run. Most insurance companies are cash businesses. They don't carry debt, but they don't like dipping into the cash in order to pay the policies, especially not the ones in Southern California that are going for 20, 30, 40 million dollars, and these houses are totally burned down. You're going to get to see something that you have never seen. You're going to see how government works. You're going to see if there's any special treatment of people based on where they live and or their financial status over others. Hey, I sure hope not. That would be wrong, right? That would be discriminatory. That would be redlining. That would be disparate treatment. All the things that we're taught in real estate as well as in life, well, guess what? Surely that wouldn't happen. Let's hope not. There are going to be a lot of people upset if they do. But I know that President Biden just said he's going to cover all the expenses for the next 6 months for the Southern California. What does that mean? What does that actually mean? Cover the expenses? Like everybody's house payment that got burnt down while they figure it out? I don't remember him doing that in Hawaii. I don't remember him doing that in North Carolina. I don't remember him doing that in Florida. I don't remember him doing that in Northern California when they had fires. I don't know. I'm sure I'm 100% misunderstanding the statement. Time will tell. But hey, I'm not asking you to take my word for it. I'm not asking you to say, hey, Rich, we don't want to hear your opinion. I mean, because that's all it is an opinion. Well, here, let me share my screen and share. Let's take a look here. Wow, this just came out a day ago on January 9th. Homeowner insurance trends in 2025, what you need to know. And right away, Bob Phillips here, he says something in this article. He starts to talk about, you know what, that the home insurance landscape so many are struggling with in 2025 is shifting rapidly. And as a homeowner, you need to stay ahead of the curve. From the ongoing insurance crisis to the effects of climate change, including the devastating wildfires currently threatening Los Angeles. These trends will directly impact your ability to find affordable and reliable insurance. Here's what you need to know. Well, right off the bat, I'm just going to throw it out there. You can bite my ass about climate change. Sorry. And I have friends. I came from California. Look, say what you want. I have pictures of San Francisco Bay, 100 years old, therefore, right there. I'm trying to remember where the sun sets on the beach right there. The water line's the same as it was 100 years ago. God, that climate's really changing. Okay, how about one that I really know? Newport Beach. I've been alive for 57 years. I grew up going down to the beach all the time. They have these houses that are right there on the beach that within 100 yards of the ocean, and you got the sand, and you could walk along. And man, it's a great time. All the way to San Diego. But yet, in 57 years, the water line is still the same. Well, Rich, you don't understand, man. It's the fracking. It's the oil. You don't understand, Rich. Well, We can talk about all we want, and then we have a show called Landman that kind of breaks it down that says, do you even understand what they drill for? It's petroleum. Have you heard the word petroleum before, and do you understand what petroleum is used for? Anything that's plastic has petroleum in it. They're not just drilling to use it to make gas for your car. It's used in a lot of things. It's used in the semi that brings the big wind turbines out to Palm Springs. So, and it, the excavator that can dig the hole, and the other one that can take it up and actually make it upright. It's used in the oil that greases those turbines. Like, oh no, but man, we're solar. Well, let's talk about solar. Let's talk about the batteries in a Tesla or any other electric vehicle. I mean, let alone some of these things are thousands of pounds. Do you understand how they make a battery? Do you understand where they get the stuff to make a battery and what they use to go, the big diesel engines that they use to excavate the minerals that make the batteries that go in the electric vehicle? And you look at the end product and go, gosh, that is so clean. What we are basically saying is we don't care if Africa burns to hell and goes downhill. As long as our area looks good, we'll keep it clean. And I want to keep pushing that climate control as you use plastic products. Whatever, we'll just keep moving on. I'm on a soapbox today. 2025 is about reality checks. So let's get into it. I expect nothing more than for people to use climate change to create a crisis. What I see is insurance carriers not wanting to give up their cash. They have been cash rich for years, and now they have the ability to do right by people, and the first thing they do is want to find ways to not pay. So let's just jack it through the roof. You think, oh God, if I can't buy it, investors are going to buy up all the houses. Really? Are they getting special interest or special insurance rates? Because my investors are getting high insurance as well. So where's that going to go? If I have higher insurance on my rental property in Warner Robins, Georgia, that's going to raise the cost of my rent in that area because I need to cover the average cost of that home. Hey, so renting versus owning isn't the answer. So let's go a little more here. So the growing insurance crisis, again, talking about grappling with crisis and cost and the rising cost, because it's weird. Some states it costs 4 times as much to build that same house as it does in other states. I don't know. Go figure that one. Climate change and catastrophic losses. Yeah, I would say that what's happening in Southern California today would fall into catastrophic losses. By the time they tally the cost of those homes, it's going to be outrageous. Let's talk about permits in the state of California. In those areas that are on fire right now, some of them are backed up 2 years just to get a permit to take your fence down. And now they got to rebuild houses, 10, 20, 30, 40, $50 million giant mega houses that the rich and famous do. Will they get special treatment? I don't know. I sure hope not. Is their house any more important than the person building a 1,000 square foot house up in Big Bear or San Bernardino or Riverside, Sacramento? I don't know. You tell me. It's not supposed to be that way. Well, we're going to find out. Will people be treated the same, or will status come into play? I hope not, but we'll find out. Emerging trends in home insurance. Right? While the challenges are significant, 2025 is also a year of innovation and transformation in the home insurance industry. We're going to have an increased use of technology. We're going to have parametric insurance. The innovative model pays out based on predefined triggers. Ooh, that's interesting. Customized coverage options, focus on resilience, regulatory changes. Every one of those scare me because what they're going to do is say, hey, you live in an area and we are going to either make you make changes to that property or we're not going to insure you. Because our models show, unlike the models prior to it, but now our models show that we don't think you're a good risk. This house is not in our best interest to insure. So when you get to that kind of an insurance system, guess what? The final result is rising costs and premiums nationwide. If I sound a little upset, I probably am, because everybody deserves a right to be a homeowner. So many people want you to focus over here on the interest rates, but yet we don't talk about property taxes. We don't talk about homeowners insurance. Property taxes in some areas are outrageous. Guess what? If you don't pay your property taxes, you can also lose your home. Insurance. If you don't keep your house insured, they can insure it for you with forced insurance. If you still want to fight it, guess what? You're in default on your agreement on your mortgage where you said that you'll keep it insured, and they can call the note due. What do you think is going to happen when people stop making their payments? If your house burns down and it takes 2 years for you to get the money, the permits, and to get it rebuilt, do you think that you get to stop making your payments? No. They expect payments every single month according to the contract. If your car gets in an accident and it gets put into the shop for 4 months while they get the parts, do you still have to make the payment? Of course you do. Otherwise, what happens to your credit? Now, you will have people in hardship situations that say, you know what? I have a hardship and I'll just write a letter and that's okay. It doesn't matter if my score went from 800 down to 550 because I didn't make house payments. How many payments do you need to get behind on your mortgage before it's the same as a foreclosure? Hey, Rich, I got down 90 days, but I brought it back current. So it doesn't matter. You get 90 days down, you're pretty much unlendable. That's a hard money loan. You're going to have to go like 2 years of being perfect before it's off or out of the 24-month window for you to get a loan. Or a loan that's worth having. I can get you hard money all day, but it's not a loan you're going to want. I'm frustrated today that in 2025, after 200 years of having insurance in place, you would think that we would be better at how this works. But I feel like insurance has become a business, and anything that becomes a business isn't to the consumer's best interest. All right, I'm going to go back to this. I'm going to stop sharing here. There we go. Hi, it's me again. I'm going to go ahead and make this prediction in 2025 that it won't be the interest rates in 2025 that cause the most headaches. It's going to be insurance. Insurance is going to become a major hot topic, not only for current homeowners, but for people trying to purchase homes. Even people that have insurance on their home and they sell it, they assume that it's insurable to the person buying it. And guess what? Sometimes you're grandfathered in because you have a good record, but you go and guess what? The next person's going to pay the higher premium, right? They wait for the changeover. As that starts to set in, what do you think is going to happen with the housing market? I mean, rates are already high. People say rates aren't that high. Rates have been higher before. Yeah, but not. Yeah, my mom bought at 18%, but her house was $27,000. That same house today is $450,000 in San Bernardino, California. She couldn't afford 18% today on that house. So we got to be realistic. The cost of real estate continues to go up over time. We have corrections, but if you bought today, even if it went down 20, 30%, if you held that investment, it's going to go up, and 10 years from now, you will probably be even and or ahead. It's a long-term investment. Anything that you buy, from stocks to Bitcoin to real estate, if you're trying to be a short-term investor, then you're playing in a market that the average person does not have enough knowledge to do that, and you will probably lose more than you'll gain. Long-term investors of any one of those items, Bitcoin 10 years ago, pick any stock you want 10 years ago, pick any house that you thought about buying or owned 10 years ago and compare it to today. In many cases, if not most cases, they will have doubled and or tripled. I mean, I won't even talk about Bitcoin, what it's done in 10 years. What do you think it's going to do in the next 10 years, right? What do you think real estate, that same house you're in right now, is going to cost 10 years from now? We create these issues. Sometimes we think because we vote people in, politicians, both senators, congressmen, our local mayors, our governors, that they're supposedly the smartest people to handle these kind of things. These aren't business-minded people, they're politicians. And what happens to an economy that's run by a politician who can't even balance the budget in their state or federally? Problems. When we can't account for the dollars that we are sending out of our country, and you think, where are those dollars coming from? Oh, we just print more. We just keep printing more. We have an endless supply. I can't print money. Maybe you can. If I print money, I go to jail. But our government can print money all day long, and it devalues the current backing of our money, which then makes things more expensive because now it takes $2 to buy that Coke at McDonald's where it used to take $1, where it used to take 50 cents, where it used to cost a quarter, right? Something's going to give. We have pulled that rubber band about as far as we can pull it. And I'm telling you right now, that rubber band has become a 800-pound crossbow, and it is going to snap, and we are getting ready to have some type of a change. It's either going to be a policy change on insurance, where it's now at the government level and or the state level. Quite honestly, I think maybe it should be. Each state knows their area better. If you want to live in California, then maybe you get a California policy. You want to live in Wyoming, you get a Wyoming policy. If you can't afford one, you got to make better choices. People always say, but I have a right to live where I want. If you can afford to live, you have a right to drive the car you want. If you can afford it, you don't have a right just to do whatever you want if you can't afford it. The reality of what we have created is going to absolutely make some differences in how we lend money and who can qualify. And that's where I'm upset, because first-time home buyers, the dream of being a homeowner is getting squashed by these horrible decisions made by people that have forgotten what it was like when they bought their first house. We are pricing out the next generation. I'm in Georgia, and they're amazed at the values of what these houses have done with all the influx of people from California and the East Coast that are coming from those states because they're like, hey, we've had enough. We're going to take our dollars and we're going to come, and we need something more balanced. And they get a lot more house. But the people that have been here are frustrated. There's areas where people are like, man, you're pricing us out of our own neighborhoods. So you have frustration from the locals. You have frustration from the states that are losing people, because how do most governments make their money? They do it through property taxes, right? Taxation. And when the people who are making the money and the companies leave those states, who's going to pay the money, right? So now you're going to have layoffs. You're going to have, possibly your first responders get reduced so that they can save money. And then all of a sudden your water resources get reduced because maybe you're selling the resources out of state to the state next to you. Hey, that kind of stuff's been going on for a while, but we've tolerated it. And then something like this comes along in Southern California and it exposes it. You're told, hey, Rich, you're a conspiracy theorist. No, I wake up every morning and I listen to about 20 different news sources. Isn't that what we're supposed to do? We're supposed to wake up every day and educate ourselves so we can make the best decisions for our families. And I have a business. I got to make the best decision for my business. I want people to experience home ownership. They shouldn't have to rent their whole lives. For most people, that is the one asset that will change their lives for generations to come. For some people, they're real estate rich, cash poor. Go to San Jose, California. I have friends that down there have $2 million houses. They owe $300,000. They can't sell. They can barely afford to make the payment on the $300,000, but they've got a lot of equity. They can't do anything with it. They can't convert it into dollars per month. They would need to sell. Well, what's the rule if you sell your house, your primary residence? If you're married, the first $500,000 of profit, what you bought it for, what you sold it for, the first $500,000 of profit on that sale of real estate is tax-free. If you're married, if you're single, it's the first $250,000. So if you have $1.5 million worth of equity in your house in California and you're going to move, guess what? You're paying taxes on the $1 million. People say, nuh-uh. As long as I take all that money and put it into a new real estate, like, hey, sorry, that rule changed 20 years ago. The current rule in place across the United States says if you're married, the first $500,000 of profit when you sell your primary residence, if you've lived in it at least 2 of the last 5 years, is tax-free. If you're not married, then the first $250,000 profit is free. I bought my house for $500,000. I sold it for $1 million. I had paid my house off, so I owe 0 on it. So I'm going to make $1 million. How much do I pay in taxes? People always say, "Oh my God, I made $1 million." It's like, no, you didn't. That's how much money you got out of the transaction, but that's not the actual taxable profit that we're talking about. You bought it for $500,000. You sold it for $1 million. That's $500,000 that you made on the property. It doesn't matter what you owed on it and how much you paid it down. You bought it for a specific amount. You sold it for a specific amount. If you're married, the first $500,000. What can you write off against it? Well, how about home improvements? How about realtor costs? Have you had any major home improvements that you've done to that property over the years to help it stay current, to keep value? Did you keep track of your receipts? You get to write that down to try and get you back into that $500,000. So you can actually, did you add on a room? Did you add on square footage at 80? If ever the real estate agents need to be sharp, it's right now. People need to know what their options are, and we need to be able to get people into houses. We started this conversation talking about insurance, so I'm going to end it that way. Something has to give. Either the government needs to chill out on the property taxes, either the insurers need to get real on what they can and can't do, and or the interest rates are a combination of all three coming together in order to bring an opportunity for people to be homeowners, then so be it. It's what needs to do. Otherwise, we need to check back into what's called self-insurance. Some people are at an age where they have enough assets where they can self-insure. A lot of people that come in from outside the United States that are not citizens, they will self-insure. Did you know you can self-insure your cars? Did you know you can self-insure your house? There's rules to it. There's bonds. There's equity and different things that you have to look into. But that's a different topic, and not everybody can afford it. But some people can. I would think that most of the people living on Southern California in these $30 million houses, $50 million houses, could self-insure their houses. But hey, that means you're going to have to set some money aside into a guaranteed account. And that's possibly what they don't want because they haven't had to do that. But for the first time, we could see a change in that. Interesting thought process. Hey, we're just spitfiring here. Hey, my name is Rich Hanlin. This is Mortgage Ballers. 2025 is about being real. It's about being direct. It's about having the real conversations that allow us to figure out the next step, not just for the loan officers to find that next deal, but your realtors to find that next deal. And together, combined, we put people on houses. We keep the market moving. We keep it alive. And we help people combined experience the American dream of homeownership. That's what I'm dedicated to do. And after 35 years, I'm doubling down. My kids need to be able to buy a house. Their kids need to be able to buy a house. They need to not just be renters. Those things, it helps the average Joe have a chance at generational wealth, and they deserve it. All right, I'm signing off. Until then, stay thirsty, my friends. Rich Hanlin, Mortgage Ballers. I'm out.